Hey everyone, and welcome back to the channel where we demystify the complex world of hard-to-borrow stocks and potential short squeezes. Today, we're diving deep into a fascinating case study that's popped up on our screeners, and it's Token Cat Limited, trading under the ticker TC. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Token Cat Limited, or TC, is a company operating in the communication services sector, specifically within advertising agencies. Through its subsidiaries, TC functions as an omni-channel automotive marketplace primarily in the People's Republic of China. They also delve into electronic equipment trading, technical support, and consulting services. Many of you might know them better by their former name, Tuanchi. Currently, Token Cat Limited holds a market cap of approximately $62.06 million. Looking at recent price action, it's been a tough ride for TC shareholders. The stock is down 4.44% today, a significant 19.11% over the last 5 trading days, and a staggering 73.40% over the last 30 days. Third chart of TC price action. Where's cost to borrow and why it matters? Before we dive into why TC is on our radar, let's quickly clarify what cost to borrow or CTB means. When someone wants to short a stock, they first have to borrow shares from an existing shareholder, usually through the broker. They then sell those borrowed shares, hoping the price will drop so they can buy them back cheaper later, return them to the lender, and pocket the difference. The cost to borrow is the annualized fee that short sellers pay to borrow those shares. It's expressed as a percentage, and it can sometimes exceed 100% because it reflects the supply and demand dynamics for those particular shares. A high CTB indicates that there's strong demand from short sellers to borrow the stock, or a very limited supply of shares available to lend, or often both. Why the stock is hard to borrow right now. Now let's talk about Token Cat Limited specifically. TC has landed on our hard to borrow screener for some compelling reasons. The current cost to borrow fee for TC is an astonishing 883.4% annualized. Highlight 883.4%. Think about that, nearly 9 times the value of the stock per year just to hold a short position. Even more striking is the momentum behind this fee. It's seen a dramatic increase of 769 percentage points over the last 5 trading days. This isn't just a high fee, it's a rapidly escalating one, signaling that demand to short TC is surging, or the supply of shares is drying up at an incredible pace. To put it into perspective, there are currently only about 25,000 shares available to borrow for TC. When you consider the estimated flow for Token Cat Limited is around 7.3 million shares, the 25,000 is an extremely small fraction. This combination of an exorbitant CTB fee, rapid CTB momentum, and extremely limited borrowable shares is precisely what makes TC a hard-to-borrow stock. Our internal composite squeeze score for TC currently stands at 54.6 out of 100, which puts it firmly on our watch list. However, it's crucial to remember that a high cost to borrow does not guarantee a short squeeze. Sometimes, short sellers have extremely high conviction that a company's prospects are dire, and they're willing to pay steep fees to maintain their bearish bets. Squeeze mechanics explained. So, what is a short squeeze and how does it relate to all this? Imagine a large number of short sellers betting against TC. If the stock price starts to rise unexpectedly, those short sellers begin to lose money. With an 883.4% annualized cost to borrow, their daily losses are amplified by these hefty fees. To stop the bleeding, they'll start buying back shares to cover their short positions. But if there are very few shares available to borrow, and existing short sellers are all trying to buy back at the same time, this sudden buying pressure can overwhelm the limited supply, driving the price up even further. This forces more short sellers to cover, creating a cascading effect of short squeeze. Dilution risk check. One of the biggest threats to a potential short squeeze is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide liquidity for short sellers to cover their positions without significantly impacting the price, effectively negating the squeeze mechanics. For Token Cat Limited, we checked recent SEC filings like SMINUS1s, SMINUS3s, or 424BS, and found no recent dilutive SEC filings in the last 90 days. This means there's no immediate, overt risk of the company flooding the market with new shares. Additionally, we found no recent reverse splits for TC in our look-back window, which can also sometimes complicate short squeeze dynamics. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given TC current setup, what should you be watching for? Despite the astronomical cost to borrow, Token Cat Limited has been trending significantly downwards recently. Remember, it's down over 73% in the last 30 days. This indicates that short sellers are currently winning, and their conviction is strong enough to absorb those high borrowing fees. Volume is another key indicator. Today's volume for TC was 298,658 shares, which is only about 0.1x its 30-day average volume of 2,878,611 shares. Show volume data. This extremely low relative volume suggests very little current trading interest, which means any significant change in buying or selling pressure could have an outsized effect. Keep an eye on further changes in the cost to borrow, the available shares to borrow, and any sudden spikes in volume accompanied by significant price increases. Such developments could signal a shift in sentiment or the beginning of short sellers scrambling to cover. Token Cat Limited presents a fascinating case with its extremely high and rapidly increasing cost to borrow juxtaposed against its recent significant price declines and low trading volume. It's a prime example of a stock that's definitely hard to borrow, putting it on our educational radar for potential squeeze dynamics. But as always, understanding the mechanics is key, and high CTB is just one piece of the puzzle. Always remember to conduct your own thorough due diligence. If you found this breakdown of TC insightful, please hit that like button, subscribe for more deep dives into hard to borrow stocks, and let us know in the comments what stocks you'd like us to analyze next. Thanks for watching, and happy learning.